Okay, I'm just shooting another quick video giving you your weekly variable rate update. Now, it's important to know that, of course, most of you know by now that the variable rate does not go up every single week. So there was no chance to go up with this week because, of course, there isn't another Bank of Canada meeting until March. So remember, no matter what the media says, when we talk about rates going up only means the overnight rate for banks, which is the cost of funds on how they lend to each other, which in fact affects the prime rate. So today I just wanted to focus on a couple things to be aware of that maybe you didn't know about rates going up. First of all, when the overnight rate goes up, it doesn't necessarily mean the prime rate goes up. And it doesn't necessarily mean that the bank passes that difference on to clients, whether good or bad, up or down, on their prime rate. Now, obviously, when the prime rate and the overnight rate goes up, they usually increase their prime rate. So why wouldn't they take the extra money? The secondly is that just because the prime rate goes up, your payment may not go up. Over half of our clients right now have a mortgage, particularly if we have them with you with TD or Coast Capital Savings. Those are variable rates that no matter what, your payment never goes up. Now, the interest to principal ratio changes, but your payment never goes up. So if you're worried this year and someone's telling you, oh my goodness, my payment's gonna go up, that may be actually impossible. So if you're wondering about that, ask me about that. And we might be able to move you to a lender that allows that if you're really worried about that. Of course, there are some advantages and disadvantages to that, but it's worthy for you to look at that. So remember, when rates, if and when they do go up, your payment may not go up with it. So that's very important as well. And thirdly, I just wanted to bring something that somebody asked me today. Rates only increase when the market is good. So you never really have a situation where all of a sudden a variable rate, the overnight rate is increasing and the economy is really sluggish, or there's not enough growth, because that's the idea between increasing rates. They don't increase rates accidentally or not on purpose. It is a meeting they have and they increase the rates in that meeting. So you're always going to have a situation where you have a real estate market that's relatively robust, that's relatively strong. And so the idea that you get into a situation where if a variable rate went up, that you would, lose your home, that's actually highly unlikely as well, because you're always going to be in a situation where you could actually cash out and sell your home, re-amortize your loan. So lots of options from that perspective. But anyway, if you haven't had a chance to talk about your variable rate option with me, again, we're not recommending locking in. Please do reach out. One thing we are recommending, you'll see a lot of videos we have on this, is called a payment reset. Just make sure you have the lowest possible payment under the variable. So if you want to check, see if that's available to you, that will lower your payment. That will lower your interest without you locking in. Have a great week.